New South Wales has long been Australia's tourism jewel. Sydney Harbour went beyond scenery, it served as economic infrastructure. Millions of international visitors, particularly wealthy Chinese tourists and property investors, pumped billions into local businesses, generating $13.9 billion annually in international visitor spending. But in 2026, that engine is sputtering, through politicians alone. In months, escalating political rhetoric and hostile decisions are triggering collapse of NSW's most valuable customer base, Chinese tourists and investors. With them could go $4.3 billion in annual Chinese spending, billions in property investment, tens of thousands of jobs, and Sydney's luxury retail sector. Airlines are reconsidering routes. Property values face pressure. Once booming tourism districts watch customers shift to Japan, Singapore, and Thailand. This is political recklessness. A state that thought it could maintain dominance while alienating its largest spending visitors is discovering the math fails completely. New South Wales is burning its tourism economy for geopolitical posturing, and the damage may already be permanent. The warning signs flash red. By early 2026, cracks in NSW tourism became obvious. They were statistical warnings that something fundamental had shifted. Chinese tourist arrivals to NSW, which reached 493,600 visitors in March 2025, suddenly plateaued. Industry insiders report booking inquiries from mainland China dropped 22% in first quarter 2026. Property searches by Chinese buyers in Sydney fell 31%, leaving agents staring at vanishing pipelines where million-dollar transactions once flowed. Airlines report softening demand. Qantas and China Eastern reported 18% fewer forward bookings for Sydney-Shanghai, Beijing, and Guangzhou routes compared to historical averages. For an economy built on predictable Chinese visitor inflows, these figures represented alarming trend reversal. Luxury retailers on George Street and Westfield Sydney reported sales declines of 15 to 25% in categories where Chinese tourists historically dominated: designer handbags, jewelry, premium cosmetics. The spending patterns that once defined Sydney retail were evaporating. The numbers translated into stark reality. Chinese visitors to NSW spent average $8,716 per trip in 2024, far exceeding any other nationality. Replacing one Chinese tourist household requires approximately 4 American or British visitors. Since average Western tourists spend just $2,800 per trip, the replacement mathematics became impossible. Real estate served as most visible casualty. Chinese buyers represented 15% of foreign property transactions in Sydney's premium suburbs. In Chatswood, Burwood, and Hustville, new apartment pre-sales dropped 28% in first quarter 2026. Developers faced unsold inventory and financing pressures. Foreign investment applications from Chinese nationals for NSW property declined 34% year-over-year through March 2026. When foreign buyers question market stability and welcome, they immediately redirect capital permanently to alternatives offering better political climates. We're independent Australian news covering what mainstream outlets refuse to cover. Join our channel to help us continue. Education emerged as another pressure point. Chinese students generated $2.8 billion annually for NSW universities. Universities Australia reported 12% decline in Chinese student visa applications for NSW institutions in early 2026. Each lost student represented approximately $50,000 in annual economic contribution. Tourism operators serving Chinese visitors faced immediate pain. Mandarin-speaking guides reported 30% fewer bookings. Luxury hotels with Chinese language capabilities saw group bookings cancelled. Sydney Opera House and Taronga Zoo reported double-digit declines in Chinese visitors. What made the situation truly alarming went beyond magnitude, it was the speed and concentration. Chinese visitors represented just 6% of total NSW visitors but contributed 31% of international visitor spending. Losing this segment meant losing nearly one-third of the state's most profitable tourism dollars. This went beyond market correction. It was beginning of structural dismantling triggered by political decisions prioritizing ideology over economics. And the cascade had only begun. Sector by sector economic devastation. When Chinese visitor decline accelerated through mid-2026, New South Wales' economy fractured across interconnected sectors. The collapse moved methodically through industries built around high-spending Chinese customers. Luxury retail suffered first and worst. Chinese tourists accounted for 41% of luxury purchases in Sydney CBD. By June 2026, flagship stores on Pitt and George Streets reported sales declines of 35 to 48% in watches, jewelry, designer fashion. Brands like Gucci, Louis Vuitton, and Cartier that had expanded Sydney footprints for Chinese tourists faced decisions about store viability. The Daigou shopping network collapsed overnight. Entire shops in Burwood and Chatswood specializing in infant formula, vitamins, and skin care for Daigou customers reported 60 to 70% revenue declines. Many began closing permanently. Hotels faced brutal mathematics. Chinese visitors stayed average 19 nights, far exceeding Western tourists 7 to 10 nights. Five-star hotels in Sydney CBD that allocated floors for Chinese groups saw occupancy collapse from 85% to 40% within months. The Langham, Shangri-La, and Four Seasons reported sharp declines, forcing difficult staffing decisions. Education institutions felt immediate pressure. NSW universities generated $3.2 billion from international students, with Chinese comprising the largest nationality. The 12% decline in applications represented $380 million in direct fee revenue loss, but total economic impact exceeded $800 million including accommodation and living expenses. Private colleges and English-language schools depending almost entirely on Chinese students entered crisis. Several began redundancies, with estimates suggesting 2,000 to 3,000 education jobs at risk by end of 2026. The pipeline effect was devastating. Fewer students meant fewer graduates meant weaker alumni networks. Property development stalled. In suburbs where Chinese buyers represented 30 to 40% of new apartment purchases, developers struggled to secure pre-sales for construction financing. Projects in Chatswood, Rhodes, and Zetland faced delays or cancellations. Construction jobs connected to these projects, estimated 8,000 to 12,000 positions, became vulnerable. Existing property market felt strain as Chinese owners began selling. In June 2026 quarter, Chinese sellers listed properties 24% higher than previous year. This supply increase hit a market where primary buyers withdrew, creating downward price pressure. Properties in Burwood saw median prices decline 8% in 3 months, Chatswood apartments fell 6%. Major outlets ignore stories like this. We never will. But we can only keep investigating with your support. Join to help us stay independent. Restaurants serving Chinese clientele faced catastrophic losses. Establishments in Haymarket, Ashfield, and Burwood reported revenue declines of 40 to 60%. Many independent operators employing dozens faced closure. Estimates suggested 300 to 500 Chinese restaurants would close within 12 months. Tour operators specializing in Chinese visitors lost their business model. Companies with Mandarin expertise saw bookings collapse 70% or more. An industry employing 3,000 to 4,000 people in NSW faced decimation. Airlines reduced capacity aggressively. Air China announced 30% cuts in Sydney-Beijing flights. China Eastern cut Shanghai-Sydney by 25%. China Southern reduced Guangzhou-Sydney services. Qantas scaled back Shanghai routes. These cuts removed approximately 450,000 seats annually from NSW China market. The tourism multiplier effect amplified every loss. Each dollar of Chinese tourism spending generated additional $1.80 in flow-on economic activity. As $4+ billion in Chinese spending evaporated, total NSW economic impact approached $7 to $8 billion including multiplier effects. What made sectoral collapse devastating was geographic and demographic concentration. Chatswood, Burwood, Eastwood, and Haymarket, areas thriving on Chinese spending, faced localized recession. Those areas had zero alternative customer base to fill gaps. The world seizes NSW's lost billions. As NSW hemorrhaged Chinese visitors, rival destinations wasted zero time capturing diverted spending. What NSW lost, Asia-Pacific absorbed. Japan moved first and most aggressively. With geographic proximity to China and reputation for safety, Japan positioned itself as natural alternative. Japanese Tourism Board launched campaigns in Shanghai, Beijing, Guangzhou emphasizing visa-free entry, affordable pricing, and respect for Chinese visitors. Chinese arrivals to Japan surged 41% in first half 2026, with spending exceeding $8.2 billion annually. Tokyo, Osaka, Kyoto saw unprecedented Chinese numbers. Luxury retailers reported Chinese buyers replacing Sydney purchases with equivalent purchases in Ginza and Shinsaibashi. The spending simply relocated to markets where Chinese visitors felt welcomed. Singapore capitalized ruthlessly. The city-state launched Confident Welcome campaign targeting Chinese families, emphasizing political stability, world-class infrastructure, genuine appreciation. Singapore Airlines increased mainland China flights 22%. Chinese visitor numbers grew 38% year-over-year, spending concentrated in same categories NSW dominated, luxury retail, education, property. Singapore's property market particularly benefited. Chinese property purchases increased 51% in 2026, buyers citing concerns about Australian foreign investment restrictions and anti-Chinese rhetoric. Money that would have deployed in Sydney apartments flowed into Singapore condominiums. Thailand positioned as value alternative. Bangkok and Phuket saw Chinese arrivals increase 44% in 2026, visitors spending averaged $3,200 per trip. Thailand issued streamlined visas and courted Chinese tour operators, making clear Chinese visitors were actively desired. New Zealand emerged as surprising winner closest to home. While also managing complex China relations, New Zealand calibrated messaging more carefully, avoiding harsh rhetoric characterizing Australian debates. Queenstown, Auckland, Rotorua saw Chinese numbers increase 23% in 2026. Spending that would have benefited Sydney instead boosted New Zealand's visitor sector. Malaysia and Vietnam joined the feast. Combined, they absorbed estimated $1.8 billion in Chinese tourism spending that might have gone to Australia. Diversity of alternatives meant Chinese tourists had abundant choices when deciding to avoid Australia. What made diversion permanent was infrastructure and habit formation. When Chinese tourists discovered Japan's service, Singapore's efficiency, or Thailand's value, they kept returning, recommended to friends and family, shifted default travel preferences. Tourism patterns, once disrupted, rarely revert. Property investment diversion proved even more structurally damaging. Chinese investors who might have purchased Sydney apartments instead bought in Singapore, Auckland, Tokyo, Vancouver. Once capital deployed abroad and generated returns, it stayed abroad. NSW would lose 2026 investment plus all future investment as well. Education followed similar patterns. Chinese students choosing Canadian or British universities over NSW would spend 3 to 4 years building networks in those countries. Their future tourism visits, family visits, their own children's education decisions would reinforce those patterns. Losing one cohort meant losing decades of downstream connections. Collectively, Chinese tourists and investors reallocated over $3.5 billion in spending away from NSW to alternatives in 2026. The billions that left found permanent homes elsewhere in markets actively wanting Chinese money rather than treating it with suspicion. Political denial while Rome burns. While billions in Chinese tourism dollars migrated to competitors, NSW and federal leaders remained trapped in denial and ideological posturing. The disconnect between economic data and political rhetoric reached levels that would be comedic if consequences were anything but devastating. Numbers screamed crisis. Tourism Research Australia data through mid-2026 showed Chinese visitor spending in NSW down 31% year-over-year, representing direct loss of $1.3 billion. Property investment applications from Chinese buyers fell 47%, translating to $2.8 billion in foregone transactions. University revenue from Chinese students dropped $380 million. Yet in parliament and media, politicians insisted everything was fine or blamed external factors. Federal ministers defended harsh rhetoric toward China as necessary for national security, refusing to acknowledge connection between hostile political language and tourism economics. When Tourism Australia reported alarming declines in Chinese bookings, response was to blame COVID-era hesitancy or Chinese economic weakness, despite data showing Chinese tourism booming to Japan, Singapore, Thailand. Internal documents told different story. Leaked Treasury briefings projected NSW could lose $5.2 billion in cumulative Chinese visitor spending through 2027 if trends continued. Department of Foreign Affairs and trade memos warned political rhetoric was directly impacting visa applications and visitor sentiment. Yet publicly, ministers insisted zero crisis existed. State government proved equally disconnected. NSW tourism minister statements emphasized domestic tourism growth, ignoring that domestic visitors spending $1,200 per trip could never replace Chinese visitors spending $8,700. Simple mathematics showed replacing lost Chinese spending required additional 1.2 million Australian tourists to NSW annually, figure having zero basis in realistic projections. University administrators publicly maintained enrollment was stable while privately warning Senate committees about existential budget crises. Several NSW universities began redundancy programs affecting hundreds of staff, yet official messaging insisted international education remained strong. Real estate developers and tourism operators tried desperately to raise alarms. Industry groups presented data showing clear causation between political rhetoric and Chinese buyer withdrawal. Tourism and Transport Forum, Business NSW, Property Council issued joint statements warning of economic catastrophe. Political leaders acknowledged concerns privately, then returned to public rhetoric further alienating Chinese visitors. Perhaps most damning was refusal to learn from comparable disasters. Florida's loss of Canadian snowbirds provided clear template of how hostile rhetoric destroys tourism economics. Yet when industry groups cited Florida as cautionary tale, politicians dismissed comparison as irrelevant. Parliamentary debates devolved into partisan theater disconnected from reality. Opposition attacked government for failing to protect tourism jobs while simultaneously demanding harsher anti-China policies that would accelerate declines. Labor and Liberal competed to appear tough, neither willing to acknowledge toughness was costing billions. Media amplified dysfunction by treating tourism economics and China policy as separate unrelated topics. Articles documenting tourism pain appeared alongside articles celebrating tough China stances, with zero connection drawn between policy decisions and economic consequences. What made political failure truly unforgivable was permanence of damage inflicted. Every month of inaction allowed Chinese tourists to discover alternatives. Every quarter of declining arrivals deepened infrastructure underutilization. Every year of reduced investment allowed competitors to build advantages outlasting future NSW policy corrections. The window for reversal was closing. Behind closed doors, Treasury officials and senior bureaucrats understood trajectory. Private briefings to cabinet painted grim pictures of structural tourism damage, education sector contraction, property market weakness. But political considerations overrode economic analysis. Admitting scale of self-inflicted damage meant accepting responsibility, and zero politicians were willing heading into election cycles. By late 2026, tragedy had progressed beyond policy error into willful destruction. NSW was deliberately destroying its tourism economy. It was deliberately prioritizing political positioning over economic sense, betting voters would value harsh China rhetoric more than jobs and prosperity. That bet went beyond risky. It was gamble with other people's livelihoods. The permanent economic scars. Most devastating reality of NSW's Chinese tourism collapse is that recovery will take years, if it happens at all. By late 2026, economists agreed damage was structural and permanent, creating consequences defining state economy for decade or more. Trust deficit represents largest barrier. For years, Chinese visitors and investors viewed Sydney as welcoming, safe destination. Political rhetoric shattered that perception, replacing it with feelings of unwelcome and uncertainty. When tourists and investors feel rejected, they immediately redirect spending permanently to destinations demonstrating genuine welcome. Reversing perception shift would require years of consistent, stable, welcoming policy combined with active outreach. Yet Australian political dynamics make sustained stability unlikely. Electoral cycles, party competition, media pressures create constant incentives for harsh rhetoric toward China. Each new hostile statement reinforces Chinese visitors' decisions to avoid Australia. Meanwhile, competitors consolidated advantages. Japan, Singapore, Thailand, others capturing NSW's lost Chinese spending invested heavily in infrastructure to retain visitors. As Chinese tourists discovered these offered equivalent or superior experiences at competitive prices with welcoming attitudes, loyalty shifted permanently. Stranded infrastructure compounds crisis. Sydney Airport expanded terminals for Chinese passenger flows that vanished. Hotels built Mandarin capabilities for visitors who stopped arriving. Universities created Chinese student services for enrollment that collapsed. All this infrastructure now sits underutilized, representing sunk investment generating zero return. Education sector faces particularly severe long-term damage. Chinese students choosing Canada or UK over NSW universities will spend 3 to 4 years building relationships in those countries. Their post-graduation employment, family connections, future decisions will all reinforce patterns away from Australia. Each lost cohort means losing 40 to 50 years of downstream economic connections. Property market impacts will persist for years. Suburbs Chinese buyers favored now face demand questions. Property values in these areas dropped 6 to 12% through 2026, erasing billions in household wealth. Even if Chinese buying resumed tomorrow, repairing price damage would take 3 to 5 years. Employment losses in tourism, hospitality, retail, education will simply stay lost when policy changes. Workers who lost jobs may leave industries permanently. Expertise NSW built serving Chinese visitors will dissipate as workers move sectors. Rebuilding expertise when Chinese visitors eventually return will require years of recruitment and training. Most fundamentally, NSW faces reality that tourism economy was more fragile than assumed. Dependence on single large spending nationality created concentration risk. Political decisions exposed catastrophically. Even if Chinese visitor flows somehow return to 2025 levels, experience of 2026 would make investors and businesses hesitant to rebuild same dependence. Permanence lies in opportunity cost. Every year Chinese visitors spend in Japan or Singapore instead of Sydney is year of foregone economic benefit NSW can never recover. Every Chinese student completing degree in Vancouver rather than University of Sydney is lost relationship that vanishes forever. Billions lost in 2026 to 2027 represent immediate damage plus compound foregone growth stretching decades. By end of 2026, scale of permanent damage becomes clear. NSW shattered foundation of international visitor economy, alienated highest spending customer segment, created structural weaknesses constraining growth for years. Recovery is theoretically possible, but requires political stability appearing unlikely, making damage effectively permanent. A warning for all of Australia. New South Wales implosion is a blueprint for what happens when political decisions collide with tourism economics, and warning signals extend far beyond Sydney. Because international tourism is economic foundation generating $42.3 billion nationally in 2024, supporting 621,000 jobs across the country. Loss of Chinese visitors in NSW exposed how quickly billions vanish when foreign tourists feel unwelcome. Other Australian states should be terrified, because Chinese visitors contributed $8.7 billion annually to Australia's economy before 2026 disruptions, making them second largest international tourism revenue source after New Zealand. Victoria particularly faces similar risks. Melbourne attracts significant Chinese student enrollment and tourism, Chinese visitors spending $2.1 billion annually in state. If political rhetoric continues alienating Chinese visitors nationally, Victoria will suffer same sectoral collapse NSW experienced. Queensland's tourism economy, while more diversified, still depends on Chinese visitors for $1.8 billion annually. Gold Coast and Cairns invested heavily in Chinese tourist infrastructure. If Chinese arrivals to Australia continue declining due to political tensions, Queensland will lose billions domestic tourism can never replace. Numbers reveal brutal vulnerability. International visitors to Australia contributed $42.3 billion in 2024, supporting nearly 700,000 jobs across accommodation, food service, retail, transport, entertainment. Chinese visitors alone represented 20% of international visitor spending despite comprising just 11% of arrivals. Concentration of high spending in one nationality creates same fragile dependence that destroyed NSW tourism economics. If NSW could lose 31% of Chinese visitor spending in months, what stops Victoria from experiencing same collapse? What prevents Queensland from watching Asian tourism evaporate due to rhetoric? Precedent is set, hostile policies equal vanishing revenue. Bond markets are reacting. Moody's and S&P issued warnings about Australian state finances, highlighting tourism revenue volatility creates fiscal risks. Investors now factor political risk into Australian tourism economics, previously reserved for unstable developing nations. That reputational damage affects national perceptions of Australia's reliability. Lesson is unambiguous. Australia can never assume international visitors are permanent or replaceable. Domestic tourists can never compensate for lost foreign spending. To replace Chinese visitor spending NSW lost, domestic tourism would need to generate additional $4+ billion annually just in NSW alone, requiring roughly 1.8 million more Australian tourists spending $2,400 each. That demand simply fails to exist. Other nations are watching and learning. When Australia alienates highest-spending visitor segment through political decisions, competitors absorb those visitors eagerly. Japan, Singapore, Thailand, Malaysia, New Zealand all benefit from Australia's self-inflicted wounds. Regional tourism competition is zero-sum. We're backed by nobody except you. Just us, digging into Australian news that matters. These investigations take hours to research and verify. We need your help to continue. Join our channel to support independent Australian news. Warning extends beyond tourism. If Australia can destroy $4+ billion in tourism revenue through political rhetoric, what other economic sectors are vulnerable? Foreign investment, education, exports, trade relationships all depend on perceived stability and welcome. Hostile political positioning can shatter economic relationships that took decades to build. Federal and state elections create additional risks. If parties compete by escalating anti-China rhetoric to win votes, every state's Chinese visitor economy becomes collateral damage. Incentive structure of democratic politics pushes toward harsh positioning, even when economic analysis proves such positioning is suicidal. Australia's tourism sector generated $265.5 billion in total economic contribution in 2024, including indirect effects, representing approximately 10% of GDP. Jeopardizing even fraction of that through political missteps creates economy-wide damage. Tourism jobs vanish permanently. Tourism infrastructure sits idle forever. Tourism damage compounds across years through reputation effects and competitive disadvantages. NSW's collapse is national warning about intersection of politics and economics. Question is whether federal and state governments will learn from NSW disaster or repeat same economic suicide. Given Australia's political dynamics heading into 2026 and 2027, signs suggest repetition rather than learning. And that means NSW tourism catastrophe may be just beginning of nationwide unraveling.